This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending February 11th, 2023. Our question this week is, what is disinflation? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average increased 0.5% on Friday, but was down minus 0.17% for the week. The S&P 500 increased 0.22% on Friday, but was down minus 1.11% for the week. The Nasdaq decreased minus 0.61% on Friday and was down minus 2.41% for the week. Looking at the week, we can see that there were 5 up finishes versus 10 down finishes for the major indexes. On Monday, all the major indexes finished down. On Tuesday, they all finished up. On Wednesday and Thursday, they all finished down again. And on Friday, the Dow Jones Industrial Average and the S&P 500 finished up, while the Nasdaq finished down. New unemployment claims were 196,000. Oil prices rose 2%. Mortgage refinance demand jumped 18%. Treasury yields ticked higher on Friday, and Fed Chairman Powell stated that inflation is starting to ease. New unemployment claims, oil prices rising, mortgage refinance demand jumping 18%, Treasury yields ticking higher, and the Fed Chairman announcing that inflation is easing are all news, and news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down, but with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now, we are at our question of the week. What is disinflation? Disinflation is a term used by the Federal Reserve to describe an economic situation where inflation is increasing but at a lower rate. The economy is still experiencing increasing prices, but prices are going up at a lower rate than they had been in the past. Also, disinflation should not be confused with deflation. Deflation is when prices are actually going down, or that is, they are decreasing. Disinflation is when prices are increasing at a lower rate than they had been increasing. Disinflation is not generally seen as being good or bad for the stock market. Are your stocks affected by disinflation? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI. That is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside Trading Watch List from the week ending February 11th, 2023. The strongest performer on the list this week was United States Oil Fund LP, ticker symbol USO. It's in the second column. It was up 2.87% on Friday and increased 8.49% for the week. The fund seeks to reflect the performance of the spot price of West Texas Intermediate Light Sweet Crude Oil by investing in futures contracts for light sweet crude oil, other types of crude oil, diesel and heating oil, gasoline, natural gas, and other petroleum-based fuels. Looking at a summary of results, you can see that USO has decreased minus 0.34% year to date. I did not trade or generate cash flow from USO this week. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 ETF SPY. The Southside portfolio is up 15.6% versus 6.7% up for SPY, a difference of 8.9%. The Southside is beating SPY by almost 9%. The cash flow generated by the Southside cash flow system for this week was 2.53% of the portfolio account value. The account value changed by minus 9.38%. Meanwhile, the S&P 500 ETF SPY changed by minus 1.05%. Bitcoin watch. Bitcoin lost minus 7.14% this past week, but continues to be in a bear market. It is down more than 68% from its all-time high, which was achieved in November 2021. I sold option contracts on one position this week. It was a call that ranged from $0.00 to $57.35. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3. They are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.